Hi, I'm Duane Duggan. Welcome to RE/MAX of Boulder's video podcast. Today we have Trevor Bellows with Premier Mortgage here at RE/MAX of Boulder. Trevor and I are going to be talking about investor financing. Trevor, welcome and thanks for being here today.
Thanks, Duane. Appreciate it.
So many of our clients here at RE/MAX of Boulder come to us and want to get started in buying real estate and getting going. So what is the investment world out there like right now for financing?
You know, investment financing is getting a little bit easier, in fact. You know, it used to be that you had to have a whole bunch of money to be able to afford an investment property, but there's some ways to do it pretty easily.
Okay, so single family, pretty easy to get going. I mean, if you're an investor and you're not going to live in it, what's the usual down payment that you need to get for a single family house?
Right, so if you're going to just buy a property as an investment, it's going to need 20% down. That's the norm.
Okay.
25% down, your interest rate's a little bit better, but we can do a 15% down loan as well.
On single family?
Yeah.
Okay. What about condos? Do you have to put more down if you're buying a condo as an investment?
Depends, but yes, typically a condo you want to think 20% down minimum.
Okay. Any other issues in buying a condo as an investment from a financing point of view? What prevents somebody from either getting a loan at all or the requirement to put even more down on a condo?
Right. Yeah, so condos, they do have a lot of different requirements. There's what's called a condo questionnaire that the lender will send to the HOA and ask the HOA to fill it out. It's going to ask multiple questions, getting to ensuring that the condo itself is what we call warrantable.
Okay.
A lot of the questions are pretty common. They're going to be yes, no's, but the biggest one that most of us get stuck on is occupancy. Are the people living in the condo, are they owner occupied or are they tenants? If it exceeds 50% tenant occupied, then we can run into some problems.
Okay, does that usually mean more down payment or you just can't do the loan?
A little bit of both. A little bit more down payment, 25% down if you're buying it as an investment property, and then more specialized financing. We wouldn't be able to do your standard 30-year fixed Fannie Mae, Freddie Mac.
Okay.
If you're buying it as a primary residence, so you still can buy.
Okay, and we've talked about condos and single family so far. What about buying that first like duplex, triplex, or 4-unit for an investor? Is the down payments the same or is it different?
It's different.
Okay.
So if you do buy a multi-unit up to 4 units like that, and you're going to live in one of the units as your primary residence, then you'll be able to rent out the other 1, 2, or 3 up to a 4-unit property, and works out pretty nice.
Okay, and so like if you're not going to live in it and you're buying a duplex, a triplex, or 4-unit, kind of the same amounts down as far as 20, 25% down
Exactly.
or so. But what you just mentioned was that somebody could get started even in a duplex, FHA, if the loan limits were good enough for the area. You could get in with, is it 3.5% down FHA for?
Yeah.
Okay.
You could buy an FHA multi-unit property. The loan limits increase too, so typical loan limit for a purchase is going to be right around 417, but that's for a single family.
Okay.
If you're buying a duplex, for example, it's 533,850 is your max loan amount. 3-unit would be 645,300, and a 4-unit is 801,950.
Okay, so for Boulder prices, it could actually make it still fairly difficult because even a single family might be 500 in Boulder now.
Yeah.
So 417 is actually a little bit low for our specific market. Now the FHA loan limits are by county or by city?
By county.
Okay,
Yeah.
so the loan limits are the same whether you're buying an investment property in Longmont or Boulder.
Right.
And so it might be easier to get started
Yeah.
if you're a first-time investor buying FHA, live in it, and maybe Longmont or Frederick, Firestone, one of the areas a little further out.
Sure, yeah, absolutely, if there's any of those available, are there?
Well, when you think about it, within Boulder, there's not that much. Inventory is pretty limited, but as you go further east, it obviously there's a little more opportunity, I should say, as you go east. But it's still fairly tight everywhere. Spring market, when the inventory starts rising again, there could be some opportunity. So that brings up a point now, if you're thinking of investing next year, now's the time to come in and talk to you and get all your ducks in a row as far as any pre-qualifying that you might be doing.
Yeah.
So what about sources of financing? Where do you as a lender turn to for sources of investor financing?
Sure. So you've probably heard of Fannie Mae and Freddie Mac. Those are the two entities that create the typical 30-year fix that we've all probably heard over the years. So we'll go to those. Those are your traditional sources, and that's where we'll get your financing if you're buying it as an investment property or primary residence. If you're buying a non-warrantable condo as an investment property, you know, something a little more far-reaching than the norm, we will have, we'll go to specialized banks. We'll go to local banks, and they will do more, what do you want to say? They'll look at case by case and,
Okay.
and finance a property with 25% down, but it'll be a 5-year arm or maybe a 7-year arm.
Okay. As a realtor here at RE/MAX of Boulder, one of the things that I get asked a lot is how does the qualifying work for buying an investment property? In other words, you're going to be buying your first property, do they get to count the rent toward their income, or what are the rules that go along with that?
Yeah, I'm glad you bring that up. Fannie Mae and Freddie Mac, after we tanked in 2008 and 9, they really tightened that up. It used to be you could just get a lease agreement and say, here you go, here's my income for this property. Then they tightened that up and said you have to have 2 years worth of history on your tax returns showing that you've been a landlord. But they just loosened it again. And so yes, to your point, you can get a lease agreement and we'll use 75% of that amount towards your monthly obligation.
And that goes just in your income stack, just like it's from your regular job, and then it's offset by the mortgage payment,
Right.
And so the shortfall between, like, let's use an example real quick. Let's say the rent was $1,000, so you discount it to 75%, so it's $750.
Right.
If the mortgage payment was $750, it'd be a wash.
It's a wash, right.
Okay. But if it was $250 short, it would be the same as having another $250 car payment. Is that?
Right, yeah. If it
Essentially.
was short, then you have another payment. If it's long, we can't use it as income.
Okay.
So it's either a wash or just short.
Okay, and how about loan to value on the rental property that the income is coming in on? Is there any rules about, does it have to be a certain loan to value ratio in order to count it?
Used to be, you used to have 30% equity was the requirement, but now you don't.
And is that changed recently?
It's
or?
been changed as well, yeah. So
Okay, well,
a
that's
lot
pretty
of
interesting.
loosening, which is good to see.
Okay, and what about interest rates on investor financing versus owner occupied? Do you pay more interest rate on?
Yeah, so if you do the 20% down, you can figure about 3/4 higher in rate than a primary residence rate would be. So you hear the buzz out in the news, rates are at 3.875. So you'd be looking at about 4.625. If you get to about 25% down or more, then you're only looking at a half higher, I would say.
Okay, and in general, 30-year financing is available unless it's maybe one of the non-warrantable condominiums that might have to do some sort of arm.
Yeah.
So what type of arms are typically available? Are those fixed for like 3, 5, or 7, or?
Yeah,
or
5-year
all-
arm. I would say the 5-year arm is really your most common portfolio loan is what we call it.
Okay.
Yeah.
Now, you do most of your financing through Fannie Mae, Freddie Mac, FHA, typical things like that. What happens if somebody wants to buy over 4 units? In other words, they own a duplex, triplex, and they want to get into that 5-unit or a 10-unit. What's the next step? Can you help them with that, or do they have to go to a different type of lender?
Yeah, that's getting into more commercial. So anything above a 4-unit property is going to be commercial lending. And yeah, we can help. There's certainly banks around that offer it, and they compete. So sometimes you're going to find different deals, and we're usually one of those.
Okay. What about when somebody has a goal of maybe buying a rental property, maybe one every 2 years or something like that? Is that, people always ask me, how tough is that to qualify, to keep buying for things? Is it, what's the major criteria that you look at when you're
Right.
qualifying for, say, rental property number 4?
Right, there you go. Yeah, a lot of investors will allow you to have a maximum of 4 financed properties. The Fannie Mae, Freddie Mac rules are actually 10, so you can have up to 10 financed properties when you go with directly Fannie Mae and Freddie Mac. And to your point, yeah, if you were to be buying 1 or 2 per year, and now with the new rules, you're allowed to use that income immediately. You don't have to show it on the tax returns. So, yeah, you could get up to 10 in a hurry.
Okay, and are there very many people that have more than 10? Do you run into that much in your day-to-day business?
Yeah, you see it a few times, but, at that point, it's taken them so long to accumulate the properties. In order to stay under that 10 finance property rule, we can typically look at maybe refinancing one to pay off 3 of them.
Okay,
And then
gotcha.
you can get back under that 10 finance rule.
And then what happens if you've gotten so big that you have 12 properties, you want to buy your 13th? What are your sources then for helping somebody finance that?
Yeah, then it's gonna be all the portfolio loans, so
Okay.
they'd be looking at 5-year ARMs, et cetera, because those don't have a limit.
Okay, gotcha.
Yeah.
Anything else you can think of for a tip for an investor buyer right now?
Well, gosh, is now the time? Is it time
now
to
the
get out
time.
there and get out and buy your first investment?
That's a good question. I just think back to when I started in this business, when baseline subhouses were $27,000 and people were going, they just can't go over 30, they just can't go over 30. And now they're over 500,000. So from my point of view, from being in the business a long time, it does seem ridiculous that you want to buy something at the price levels what they've become. But like my kids who are in their 30s are looking at real estate investments for the first time.
Yeah.
I just can't imagine what the prices will be like 30 years from now for them. So I think now is the time. Now is always the time. It's better than sitting on the couch. It's like an exercise program. If you sit on the couch, you probably won't get hurt exercising, but then you'll probably die of being too fat or something. So non-action is always not a good thing, I don't think. So now is the time to get started.
Get in now. Okay.
All right, Trevor Bellows, thank you for being here today.
Thanks,
Appreciate
Duane.
it. Lots of words of wisdom for the
Appreciate it.
investor financing. Thank you.